Welcome to The Market is Open. Check out our website, themarketisopen.com. Today we're just going to talk about Tesla's Q3 earnings. They just reported after the bell today. People were expecting a huge loss for the quarter. However, Tesla achieved profitability for, I don't know if it's the first time, but this is a pretty big milestone for the company to become sustainable. I just wanted to go over some of the highlights and some interesting things from the quarter and from the conference call. And then maybe in a separate video, we'll go more in depth on the financials. So this quarter, they earned a GAAP profit of $312 million, which is about $1.75 a share, and non-GAAP net income was $516 million, or $2.90 a share. That's huge considering people were expecting them to lose about $1 a share. Revenue came in at $6.8 billion, and I believe the analysts were expecting 6.1 or 6.3 billion. It varies based on the website. They had large free cash flow, and their cash went up, which makes investors more confident that they'll be able to pay off their upcoming debts. Model 3 gross margin was somehow over 20%, which is pretty crazy. I believe they were targeting a percentage of 15%, and in this quarter, after having a huge negative quarter last quarter, I believe they lost $4 a share last quarter, just 3 months ago. Now they're hugely positive at 20% gross margin, and they expect it to get even better. But as the prices of the new Model 3s, which are cheaper, so as those prices come down, it might be a bit harder for them to grow revenue as fast unless their volume picks up by a lot, which could happen. So on the conference call, Elon brings some of the safety team onto the call, and so one of the first things they talk about is other companies gaming the system. They find out how the test for vehicle safety is going to work, and they try to reinforce those areas of the car. But he says that Tesla finds the weakest point in the car and tries to make that stronger, so the overall car should be safer than a regular car. Elon goes on to say that the hood is like a trampoline, so not only would it protect the driver of the car by having a bigger crumple zone, but also if you hit a person, the person will bounce off of it essentially, or if you hit another car, it should lessen the impact for the person you hit as well. The upcoming Navigate on Autopilot feature, I believe that was the feature that was held back, but they say it's going to be coming soon, where you can have auto lane changes, and which couldn't be done before. The current Autopilot can't do auto lane changes. You have to manually signal, and then the car will change lanes for you. But now I guess in Navigate on Autopilot, the car will just decide if it needs to change lanes or not. It'll handle curves better, and it'll be just an advanced autopilot. It'll also have active safety features. I believe the car already has many active safety features, such as I guess like automatic braking, but it'll I guess prevent you from hitting things. The Hardware 3 design, they say, is moving along. They have a manufacturing line, I guess, setting up for it. They're doing a lot of validation, and there's still a lot of work to get the new hardware out. I believe they're aiming for Q1 as the target, though it'll probably take them maybe some time to get ramped up in terms of the manufacturing. But this is the new chip that will have 1,000% processing power increase over the previous chip. Elon says it should be the same cost and the same power, but it'll be an order of magnitude better than the previous chip, which will help increase the accuracy of the neural nets that they have running on the device. So that'll help make the car better and one step closer to full self-driving. So yeah, pretty blow-away quarter. The stock is up 9.81% after hours. You can see their quarterly revenue in the last quarter, just 3 months ago, was $4 billion. The quarter before was $3.4 billion, but now they had $6.8 billion in revenue, which is a massive increase compared to their just from one quarter ago. And most of it is due to the Model 3, though other divisions have been executing quite well. Okay, so now moving on to the questions that were asked on the conference call. There was a question asked about cell supply, like battery cell. They wanted to know if it was constrained. The answer was that it is constrained, but it is expanding. Panasonic is doing 3 lines this year, 3 new lines for producing battery cells. We already knew that. An interesting thing was that the lines will be coming out sort of one after the other, so they'll get the first line running, then the second line, then the third, as opposed to having them all at the same time. So that's obviously better to ramp things up quicker. Like when the first line is ready, they can start using it. The management team sees Model 3 cost improvements everywhere, labor hours especially. That went down a lot this quarter as well. We'll probably make another video about the financials for this quarter. But there was less scrap, and there's a lot of opportunities for cost optimization. For international car deliveries, Europe in Q1 of next year and APAC for Q2 of next year is the target. I guess the new factories being built in China. Nobody really asked too much about that. I had a question in the previous video that we put out, which wasn't asked, about the China factory and the efficiency of that. Elon touched on it a bit, but it's supposed to be a bit more capital efficient than the factory in the United States. And there's supposed to be a gigafactory coming out in Europe probably maybe sometime next year or later, but it'll probably take a couple years for it to get ramped up. Yeah, someone asked about how easy it would be to get the current Fremont factory up to 10,000 cars per week. Elon said that it would be easy to go to 7,000 cars per week with minimal capex. I guess not easy, but minimal capex by improving the existing lines. To get to 10,000 cars per week might be a little more, so that's more of a long-term target now. It was supposed to be done by the end of this year, and it's looking to be a long-term target, but they were supposed to also be profitable only when they hit 10,000, and it looks like they're profitable at 4,300 cars per week, which is pretty crazy. Long-term, they'll probably be about 7 to 10,000 cars per week coming from Fremont, and then the rest of the world might be 8 to 10,000 cars per week. One thing that was interesting that was brought up was that Elon said he was very excited about the Tesla pickup, but none of the analysts asked any questions about the Tesla pickup. But to me, that seems pretty exciting. It's a whole new product. Elon does say that Tesla does have the best product line out of any other company in the world. I think Gene Munster was the first who said that. Someone asked about the mix in Europe for cars, and nobody cares about that. Apparently the solar roof will be, I guess, more in production in 2019. I guess it's off to a slow start, but hopefully it'll ramp up in 2019. They talk a lot about the Uber type model for Tesla cars. So Elon says there'll be a company-owned fleet, sort of to fill up gaps in ride sharing. And there might be a little bit of an app store, sort of like what Apple does, and Tesla might take a small cut of the driving, I guess sort of like Uber and Apple does in their stores and apps. Someone asked a question about what types of cars are traded in to buy a Tesla. I believe in the last quarter we saw that it was Nissan Leafs and other just regular cars, like non-premium brands. They say that as well. In this quarter, it's non-premium brands, but there's no real trend. It's just people upgrading from previous cars. They say people are voting with their money, and they're buying a Tesla, which is probably the most expensive car they've ever purchased, but people are willing to pay up for that just to get the features of the new car. One pretty interesting thing for investors was that the factory-to-customer inventory is extremely expensive. I mean, this is obvious. Inventory is the bane of existence of most retail companies, but I guess it's for sure true for the automobile industry as well. Basically, their goal is to reduce the time of delivery from the factory to customer. I believe they've started at 30 days, and their goal is ultimately to get to 10-day delivery time, maybe even 7. And if they can do that, Elon says if Tesla can do only that without changing anything else about the business, that would be gigantic for the company. Service and others should improve over the quarters. It was pretty negative this quarter. They lose money on service. I guess most auto companies make all their money off services, but Tesla has said that they sort of want to break even on services over time, unlike servicing your car. And then lastly, Elon says that the battery cost is better than everyone else. He also makes a comment at the end saying that Tesla has offered their patents and everything for free to they've sort of given it away to all these other automotive companies, and nobody's accepted them. Nobody really cares. They've asked for investments in chargers in the Gigafactory, and no other automaker has really stepped up to do that. Nobody wants to partner with Tesla at all. So I'm not sure what will happen with that if Tesla seems to still be open to that, but it looks like they might be fine on their own. They've already convinced the entire industry to start making electric cars. It doesn't look like they need to partner with Tesla. Like, it doesn't look like that matters. I'm not sure if that would be an advantage or a disadvantage for Tesla. Yeah, so in summary, Tesla earned $1.75 per share just in the quarter alone. If they continue to to grow. I mean, the number should go up, especially if they sell more Model 3s. Even if the price of the Model 3 goes down because they're selling cheaper variants, their production should go up, and they'll be able to deliver more cars. But if they keep this up for the next 3 quarters, then they have a full year of a $1.75. That's $7 per share for the year. Yeah, which is pretty crazy considering Tesla has been growing at greater than 50%. I believe they grew revenue at like 70%. But even at 50% growth, that's pretty crazy. If we give that a 50% multiple, which may be conservative, I mean, companies like Netflix are trading at over 100 times earnings. You can look at Salesforce is trading even higher than that. And Tesla makes more revenue than both those companies. They do have bigger margins, but now Tesla's earnings are almost on par with these big companies. So if we give it a 50 multiple, I mean, that's a $350 stock where it's just above where it's trading at today. I mean, for a quick growth company like Tesla, if it's $7 a share per year times 100, I mean that's $700 a share. Like it's not crazy. It's not ridiculous now to see how the company can go to $700 a share in the near term, even because next year you would hope that because they're growing the earnings per share, each quarter should continuously get better, especially as they continue to pull costs out and ramp up production. And plus, there's all these new vehicles in the pipeline. It might take 2 or 3 years for the next one to come out, but it looks like they have plenty of growth ahead. Thanks for watching. Check out our other Tesla videos, and please subscribe.